Welcome to the Stage Analysis midweek video. It's Wednesday the 27th of July and we've got had another Fed meeting out of the way, so I'm going to be have a chat through what's been going on in the major indexes first, before a quick look at some of the short-term market breadth indicators like I normally like to do on the midweek video, followed by a look at some of the stocks that have been reporting earnings this week, some from tonight and some from the last couple of nights, the mega caps such as Google, Microsoft, etc. that were reported, and the reactions. And actually I want to talk through, there's a few groups of interest. We've got with CCJ had an earnings report today, so I wanted to have a look what's going on in the uranium stocks following that. And we also got the solar stocks with ENPH having a strong earnings report yesterday, and breaking out in stage 2 breakout attempt has also started to push some of the solar stocks up. And we've also got a few other solar stocks reporting. I think Nova is reporting tonight and we're having a strong move so far. So, and I think FSLR is also reporting in the next day or so. So I'll have a look at the focus on that group as well as some of the watch list stocks from Monday and the weekend. I'll have a quick run through those as well in the later part of the video. Okay, let's get back to the start of today's video. So it was another Fed day. Obviously we get one each month. So at the moment you can see, and this is the QQQ. So this is the Nasdaq 100 ETF. You can see the strong volume that came in today in the last, this is a 2-hour chart, so in the last 2 hours we had this another Fed strong volume day. So we compare to the previous Fed meetings, this was a Fed bar as well, and this one was a Fed one as well. So you can see back in early May, we had a similar kind of move, really strong move up, but it didn't manage to commit above the prior two resistances, the June level and the 15th of June there. See, it ran into resistance from the low of the range after it had already moved. It had moved below the range, so it jumped back up into prior resistance there, and then fell down the next day. And today we've again had a really strong move, over 4% in the Nasdaq. So looks really strong, but again haven't managed to commit above the near-term pivot with that move. So not necessarily what we want to see. Although obviously big strong move, the prior two big strong moves on strong volume haven't managed to commit and then start to move higher. So interesting one at the moment. We'll see if this can consolidate and then start to build out again, but potentially we could obviously start to pull back in again, as obviously big moves in the indexes don't necessarily translate to big moves in actual individual stocks. As obviously around Fed meetings we get a lot of the high frequency traders and stuff coming in and just trading the index ETFs and not the actual stocks themselves. So we'll see what happens tomorrow in those. Look at the Nasdaq Composite itself. You can see we've got this rising bear flag type pattern that we've been forming since the June low. It's managed to get back above the 50-day moving average low. So we had the break above the 50-day, started to move above near-term pivot levels within the range. We've got this broader structure that's been developing. So pulled back into that structure yesterday. So a bit of tennis ball action today. But as I said, it hasn't managed to commit above today, although it's had obviously a very, very strong move on the day. So constructive price action at the moment, potentially above this 50-day moving average. The 21 days back above the 50-day. We've still got obviously a ways to go to the 200-day moving average, as I've talked about on the previous video. So still 13% to get back up to that 200-day moving average, and a lot of overhead resistance. So we remain in a stage 4 decline, but we're continuing to grind out a potential base structure for over the last couple of months here, with a double bottom type pattern forming. S&P 500, very much the same type of action. We had a slightly stronger close low, managed to commit above its near-term pivot high, so slightly better than the Nasdaq there. Let me refresh this chart, see if we've got that. So we've got the percentage of stocks above their 20-day moving average here at 84.8% today. So this is managing to hold up in the upper zone. So we had a breadth thrust last week into the upper zone after moving out of the lower levels of the the percentage of stocks above their 20-day moving average. So hovering up in the upper zone, so showing a short-term change of behaviour, holding above, flattening 50-day moving average here. Managed to pull back into it, consolidate and rebound back up again today. So this one's showing a little bit more constructive behaviour. Again, it's a base structure, broader base structure, bit of a double bottom type pattern forming within here, managing to break above the near-term pivot of that with 2 pivots broken there. So it's looking a little bit more constructive than the Nasdaq, although underperforming relatively compared to the Nasdaq in the near term. But obviously looking a little bit more constructive and back above the 180R level. So this is the 180R level is this level here. So it runs above the 21-day. So it's 180R above the 21-day EMA, which is in the middle of the count the bands here. So you can see when you're in a downtrend, you tend to not get back above that 180R level. We got a small pop above it back in this period here, back in late March. But we obviously the previous move up failed at the 180R level, didn't get anywhere near with the previous Fed pushback here. And so this is actually a small change of behaviour. We've managed to get a few closes above that 180R level now. So we're back in a similar kind of strength that we were seeing back in March time. So whether this can actually continue to build out and push up into a short-term uptrend back up towards the 200-day moving average is yet to be seen. If we look at the percentage to the 200-day moving average here, we've still got about 8% to go to get back up to the 200-day moving average. So again, this remains in a stage 4 declining phase, but trying to obviously build out a base structure. Russell 2000, very similar. Again, the similar base structure, got obviously forming double bottom pattern as with the Nasdaq and the S&P 500 there, and grinding up within a rising channel here in the middle of the channel at the moment. So potentially moving up into an area of resistance from the prior lows from February, March time, and where it started to break down in May and topped out in early June there. So an area of resistance coming up in this 185 to 190 zone with the Russell 2000. The VIX back below the 200-day moving average again today. So as I've talked about before, we're looking for this to continue to hold below the 200-day moving average. The further we get below this 200-day moving average, the more constructive it is in terms of stocks on the long side. Obviously, we don't want to, if it continues to move back above again, obviously that's a more difficult environment. So it's a more favourable environment when it's below its 200-day moving average. Moving on to the short-term market breadth, this is the bullish percent index. So at the top, we've got the Nasdaq Composite bullish percent index short-term chart here. So moving above 40% today, and the new NYSE bullish percent index at the bottom here, grinding up. So remains on a bullish signal. So since it started to move out on the 18th here, so same on the Nasdaq. If we go to the actual longer term chart, this is the point and figure chart with the 2-point box size, traditional bullish percent index chart here. The upper and lower zones marked. You can see today we had a double top breakout. So after coming out of the lower zone, so this has now changed status to Bull Confirmed today. So this has moved from Bull Alert, which it had been on since June. It was around the 20-something of June. I think I marked it in the weekend report if you look back on that. So it was I think it was like the 23rd or 24th of June, potentially it moved to Bull Alert, and now it's moved up to Bull Confirmed now. So continuing to build out in the Nasdaq. The NYSE one is still on Bull Alert. So if I drop back to that one, you can see it added another X, but it's got a little bit more way to go in order to make it up to a Bull Confirmed status. It would need to get above that 52% level to move back to Bull Confirmed. So this one remains on Bull Alert at the moment, although it's come up a long way from that lower zone. So it is making good, strong progress there. Right, refresh this quickly. So percentage of stocks above the 20-day EMA in the Nasdaq Composite. So this tracks around 3,500 stocks, I believe. So today up to 63.46%. So remains in short-term positive status at the moment in this one. Nasdaq 100 again, short-term positive status continues since that late June period when it started to break out above that key 30% level. So it remains on a bullish signal since then. NYSC again covering another 2,500 to 3,000 stocks in this one. 77% at the moment, back in the upper zone. So this one remains on a positive signal too. Small caps, same, up at 85%, and S&P 500 at 84.8%, so basically 85%. So short-term percentage of stocks above there, moving 20-day moving averages remains on a bullish signal, and the short-term bullish percent index also on a short-term bullish signal. So I'll cover the longer-term signals and statuses at the weekend, which obviously are a lot more mixed. So, but the short-term continues to show obviously some bullish behaviour. Right, let's move on now. So let's get into some of the stocks that have been reporting earnings and are a little bit more interesting. So EMPH, one of the most interesting ones this week. We had a stage 2 breakout attempt in the after hours last night. So this is the weekly chart. So you can see this massive stage 3 structure that's been forming since the climactic move up here. So this is your preliminary supply and buying climax. So this is your sort of stage 3 range that developed. Do it from obviously both areas, but it had a breakout attempt, made a stage 2 continuation breakout attempt, but then had the equivalent of a terminal shakeout 4 weeks up, and then started to pull back in sharply back into the range here. So formed what we call an upthrust after distribution, and then started to pull back into the range, multiple significant bars here back down into the range. So as it came down and then broke down with a huge significant bar. So you can see the expansion of the price action there as it moved back down into the range, but it didn't manage to break down convincingly into a stage 4 decline. It had a small breakdown for a couple of weeks, again shook out at the bottom of the range, held at prior support, didn't make a lower low, and then pulled back in again to the range and started to tighten up over the last 6-7 months or so. So you can see we've got a VCP pattern of sorts in this one. It's not perfect, a little bit shaky at the end. It did get tight in for the last few days or so, and now it's had a strong breakout on earnings. So, and you can see relative strength versus the S&P 500 here has broken out to new highs as well ahead of the price action. You can see it's better than it was at this point here, so showing some good positive action on the weekly chart there. If we look, zoom down onto the daily chart here, so again you can see this VCP action. So it got stronger, starting to come in here, it was a little bit more choppy in this area here, and then we had this really tight area before earnings, then got really tight on that final day before breaking out in the after hours. So as I highlighted yesterday, the after hours chart that I showed, it was up to that point and then opened obviously and continued with a strong follow-through move today on heavy volume. So see the volume here today was the strongest volume it's had since this gap up move back here, which potentially was an earnings day as well. So and you can see on the chart that's the second strongest earnings it's had in the last 9 months or so. So really good volume on the breakout. What we want to see, what you look for in the stage analysis method generally is at least 2 times the daily volume on the breakout day, but ideally Stan mentioned in the past 3 times on the daily volume, as we're looking for 2 times the average weekly volume by the end of the week. So if we go back to the weekly chart here, you can see at the moment the weekly volume compared to our prior 4 week, which at the moment is just starting to outperform that. So we generally want to see by the end of the week it up in around this range at least, but ideally much more than that. That's a minimum requirement in terms of what we're looking for what we call the A+ characteristics. So when the market environment is like it is at the moment, when we're in stage 4 and we're starting to look for turnaround plays, we're looking for those A+ quality setups. You want to see relative strength at new highs. You want to see strong relative volume on the breakout. You want to see that big volume, ideally the biggest volume it's had for a long time throughout the entire base structure ideally, and obviously a strong stage 2 breakout attempt that closes near the top of the range. So if this comes back in and closes only around half of this current bar now and has a little supply tail at the top of it, then that would obviously negate the quality of the breakout attempt. We want to see strong close, strong relative volume, more than 2 times the average weekly volume. You want to see relative strength at new highs and no near-term resistance. You can see at the moment, this one, we have got near-term resistance. It's obviously that could be a potential stopping point for this. It could, if it runs up into here, it could potentially start to pull it back in, start to form a backup range. So be keeping an eye on this one, but it does look very interesting at the moment. Right. Drop down again. So this is the daily. Like I said, strong move on the daily. So this is a really good example of what we want to see on a stage 2 breakout attempt on the chart in terms of how the moving averages are positioned. You can see you've got the 21 day strongly rising here. You've got the 50 day and the 200 day. So they're all in the right order here. The 21 days on top of the 50 and then the 200 day at the bottom. Ideally at this point, you want to start to see the 150 day moving average, which is the equivalent of the 30 week. So if I change this to 150 quickly here, you want to see that above your 200 day moving average, but you can see that's still below at the moment. So that's not the ideal at the moment. If you use Minivini's trend template, for example, a stock that's in stage 2, it's one of the things that he looks for is for the stock to be the 150 day to be above the 200 day moving average, I believe, or for the 200 day to be rising for at least a month. But he's not looking for the stage 2A breakout point, which is what this potentially is. He's looking for stocks that are already in stage 2, for example. So something that's had a strong stage 2 run and then is starting to form a VCP pattern a little bit further down the line. So he's looking for this area up here because he wants to buy at this point, the breakout through here with tight risk at this point. He doesn't generally want to buy at this point. This is the early stage analysis investor method entry point, but this is your trader method entry point. He wants to buy when you've got strongly rising 50-day moving average. You've got the 200 day has been turning up for a month or so at least, and then you've got your short-term moving averages as well, and the 150 day is above the 200 day. So this is a Minivini entry point compared to an early stage analysis investor method entry point. But obviously with this, you don't always get a strong move like this. You can obviously sometimes form your backup range. So you might be looking with this for this to have a strong initial move up into the highs there, and then start to form out a backup range and potentially start to form up a tighter range in here. So potentially that could also be a Minivini entry point up in this kind of area. Sorry, it's getting a bit messy there. So at the moment, it's looking potentially good here. So that's that one. So we drop down to the intraday again. So I highlighted with stock charts, you can add the extended hours. So if I update that, it gives you the last 3 or 4 days of extended hours here. So yesterday, I highlighted the breakout move there. You can see that strong. So this was the breakout move that I highlighted in the after hours yesterday, and then it consolidated in the pre-market and then followed through today. So really, really strong action in that intraday. You can see the pattern that's been forming on this one over like I said about the VCP, it had got nice and tight, but that's including the after hours data there as well a little bit. So it hadn't got quite that tight on the actual daily charts. So you can see we had this double bottom pattern within here and a smaller base structure that developed. So which you can see a short-term buying climax, automatic reaction, secondary testing, some obviously further testing within the range, and then it made a little bit of a local spring in here before moving back up and out. So there was potential on your intraday timeframes, various entry zones that were earlier than the breakout point if you were looking and if you were willing to obviously do that before earnings. Myself, I'm not willing to enter within that kind of time frame before earnings. It's far, if something's only a few days away from earnings or even as close as a week away from earnings, then it tends to not have enough time to build out a profit cushion. So I was talking to one of the members earlier about this, and tend to look for at least 1 times the average true range in terms of actual profit cushion. So if we go back to the daily chart here and put on the ATR candles, for example, this is what I mean by a 1 ATR level. So you've got each one of these bands is an ATR level difference. So you'd be looking for that kind of move. So on here, just quickly get a percentage gain on that. So it's at least a 6%, but ideally I'd want to sit with this one. But like I said, that's a bare minimum. I would be looking for potentially a 10% or more profit cushion before obviously potentially holding through earnings, because as we can see with most of them, they tend to have big gap moves, which in the after hours yesterday, for example, this did actually move 8 to 9%. So 10% is generally my sort of minimum requirement, but at least 1 ATR, potentially even 2 ATR of profit cushion is what I'd be looking for if I was going to hold into earnings. So that's why I generally wouldn't buy, even though it was looking great at this point in here. It just, until the earnings results came out, it's a gamble. So at this point now we've got this information, you can now obviously use that to potentially get into a position on a potential backup, or wait for the next base structure to develop and potentially another VCP pattern on a smaller time frame, like as I said with the mini entry point that might develop in the coming weeks to months. So this one is now looking obviously really good. So we want to see this build out. If we look at the actual earnings on it quickly, so this is from Earnings Whisper yesterday. So you can see it had a decent earnings surprise, and earnings growth was looking strong. So, and revenue growth. So that's why it obviously pushed out really well from a tight base pattern. So, and one thing you'll notice from this breakout is that it's breaking out from a tighter area. So this is one of the reasons that you want that VCP type pattern on a breakout, because it gives you much tighter risk control if it starts to fall back in. Because if instead this had started to break back down and come back in, then if you had got in this tighter area here, you could have immediately been stopped out for a minimal loss. Whereas obviously now, if you're getting in from a breakout where it's had a spring, so say you had this structure and it made a broader structure, and this has actually come down and formed a spring, and then had come up and broken out, and then you're buying at this point, then you've obviously got this whole move where it's run up and it's quite extended at the stage 2 breakout. So when you see spring type action, you're actually looking for entry points further down, either at the spring itself as it comes back into the range, at the breakout through the spring, or at more minor little structures that form within the base on the way up there. If you're entering at the stage 2 breakout directly from a spring, then at that point it's normally quite extended. So the ideal at this point here is to obviously wait for a backup to start to form, and then you can start to consider entry at that point if it backs up and then holds. So not at the breakout. So if you're breakouts from VCP obviously are tradable, but breakouts from a spring are obviously much more high risk. So you're looking, because it's already had that big move and not had that tightening action. So very, very different types of entries for breakouts there. So it's just a hopefully useful bit of info.